Hey guys, thanks for joining today. Have really just an amazing guy to talk shop on multifamily. An educator, a mastermind coordinator, a GP, and God's gift to women. Tim, Look, I'm happy that you're here. Maybe you could give a little bit more of your background while we're just kind of waiting for people to show up. And then also, if anybody has any questions, comments, ideas, throw it in chat. Let us know. We're going to talk all about it. And you know what? Before you introduce yourself, I've got a few really stupid jokes.
You're like one of those pastors that start out, every sermon with a joke.
Oh, completely. I mean, well, I'd like to take it like a step further of their complete dad jokes. So
Okay.
these aren't good whatsoever. But how many insects do you need to make money from your rental units? 10 ants. Yeah, just that bad. All right. Why do you never invest in Egypt? It's full of pyramid schemes.
That's hilarious.
Why was the realtor in counseling? They couldn't get closure.
That's actually a good one.
All right. And here's the best of the worst. Why do mortgage brokers always eat by themselves? Because they're loners.
That's good.
Yes.
There you go.
Yeah. Stupid jokes. There you go. Tim, please introduce yourself.
Yeah, definitely. I love it. I love I love that you make it fun here on this show. So thank you. First, thank you so much for having me on. I'm super, super pumped for this. Yeah, I have a long version and a short version. I'll give you a short, a medium version. But yeah, so if you're old enough to ever heard of the term Vietnamese boat people, that I'm one of those. It's a group of people that after the war ended in 1975, when the communist government took over, they escaped out of Vietnam on a boat. And when I was 11 years old, my older brother was 18. Um, at that time, when a boy turns 18, it's automatic draft into the military, the communist military. So a lot of boys at the time try to escape out, or they'll cut off their index finger so they can't pull the trigger. So when my brother turned 18, my parents wanted him to try to escape out of the country. He didn't want to go alone, so he asked if I wanted to come along. And as a little kid, I was like, sure, we'll come along. I never thought that we would have made it out of Vietnam, but so my brother and I, made it out. We spent 6 months in the Malaysian refugee camp, another 6 months in the Philippines refugee camp, before we made it here to Houston, Texas. So I've been here in Houston for 30 something years now. And grew up pretty much just the two of us living in Section 8 housing apartments. Some of the apartments that I go and buy now looks just like the ones that I was living at during that time. So it's been a long journey, but I was able to finish high school. During college, I got recruited by an IT company. This is during the .com days, and so I dropped out of college, went and worked at the IT firm, and you guys know what happened after the .com came, the .bus came, right?
Oh, man.
And
I was a stockbroker during that time, and it got ugly.
Yeah. And so I got laid off from my IT job, and this is now 2002. So I was working up in Dallas, Texas. So I moved back to Houston and got into real estate. So for the last 22 years, I've been in real estate. Yeah, I spent 20 of those years in the single family home space. I've done everything from, wholesaling, fix and flip rentals. And then 2 years ago was when I got into this multifamily syndications. And gosh, it's one of those things where you kick yourself like, God, I should have gotten in sooner. But I had a huge limiting belief for 20 years that multifamily commercial real estate was just too big for me, too complicated, needs more money, blah, blah, blah. All these limiting beliefs I had around it. It was, one day, one of my friends, Javier Hinojo, were talking, and he's like, "Yeah, Tim, I used to do fix and flip too, but these days, each deal that I do adds at least $1 million to my net worth." So when I heard that, so like that poked my eye, my ear up, and
Light bulb.
yeah, the light bulb. That was the first light bulb moment that came on for me. And then him and I created a program because at that time his daughter was turning 16, my son was turning 17, and we came up with the idea of, hey, why don't we teach young people, teenagers, how to invest in multifamily real estate, and they can skip the whole single family home stuff. So that was a year-long program through it was called a Teen Millionaire Challenge. And
Okay.
through that program, I get to watch these little kids, quick kiddish, right? They're teens, made over like they underwritten and made offers on over $1 billion worth of real estate.
That's
And
amazing.
yeah, and so like seeing young people doing that was the second light bulb moment for me. It's like, man, if these kids can do it, I can do it. And so yeah, so last April, April 2022, April 2022 was when I decided to go all in on this multifamily. And since then, I've been an LP and a GP in 14 different complexes now, over 3,800
Awesome.
units. So I've been very, like I said, when I said I went all in, I really went all in. Yeah.
And I love the true American story of showing up on the shores, having it sounds like a tougher upbringing, and then the entrepreneurial spirit kicks in. You blaze your own path, and congratulations, really, where you've made it in the world. It was you've been in the multifamily space for the last few years. Really, it's been an amazing run for almost a decade and a half now.
Yep.
So I've been a huge proponent of real estate to begin with. I was actually working in Las Vegas in the mid 2000s, right up until the big crash, and similarly kind of went all in with the multifamily, trying to get out of that Great Recession. And it's been an amazing run for a long time. There's so much more interest now and so much more money sitting on the sidelines, just begging to get involved. And, people have made a lot of money, not just in real estate, but in the stock markets, in their retirement accounts, and they're trying to figure out what to do next. And because there's been such a huge interest in real estate, if you were me, just barely starting out, I haven't done a real estate deal yet at all, what would you be telling me to do?
If you're brand new, never done the real estate deals, but definitely, join like attending events is a really great way to shortcut your way to learning this. Whenever you attend a like a multifamily, seminar or commercial real estate seminar, you get to learn from the people that are putting on these events. But what you're going to learn even more is the people that you're networking with, especially the ones that have done a deal. Like they're just a few steps, 1 2 3 steps ahead of you. You get to learn a lot more from them. They're typically a lot more open to sharing exactly how they did it. So yeah, so I would say the first thing is jump in, get involved in an event, one of these seminars, and get into groups and start to network like crazy. And yeah, that's what I did the last 2 years. I don't know how many events I've I've been to, but it seems like it's averaged out to be about one a month for the last 2 years, it seems. And I've built a like over 5,000 contacts in the last couple of years. So I just
That's
like I
amazing.
network like crazy. And I learned a ton. I learned so much from so many different people. And yeah, so the people who I get to learn from people who were just a couple steps ahead of me, and then also from people who are much further ahead. And yeah, so whenever I attend events, I spend more time meeting and talking to people than I actually spend inside the room, because I always like buy the ticket where they give you the recordings. Like if I want to listen to the content, I'll listen to it later, and I learn it from other people. Like that's a really really that learning mode has been very helpful for me.
It sounds like you're almost double dipping. You're really benefiting from the events, not just from the networking, also the education. And I think that's something that people really miss out on is you're focused on the education and you miss those that are around you. And the power is in the crowd and who's surrounding you. And it sounds like you've really taken that to the next level with your own groups and masterminds and shows. Is that kind of what your purpose has been behind it? Just that little bit of networking in addition to the education?
Yeah, so you know, I I'm new to multifamily, but I'm not new to business and I'm not new to real estate, right? So what the last 20 years as a business owner, the last 22 years as a business owner taught me is that, and you hear this cliche all the time, right? Your net worth is your network, or your network is your net worth, right? And so I
A
understood
Cardone
the
special.
yeah, I understood the importance of community and network, and so I made that a priority. So the first thing that I did, Nate, was I started a Facebook group to build my own community as well. So I got started in April of 2022. May 1st, 2022 was when my Facebook group started, and then June 2022 was where my weekly virtual meetup called Capital Raising Party started. So I understood that that was going to be the number one driver to my growth, and so I made it a priority. Yeah.
Got it. And you brought up your weekly capital raising party. Uh, if you don't mind, could you just drop the web address so if anybody wants to get on your list and join and check it all out, they know where to find you?
Yeah, definitely. It's capitalraisingparty.com. So super easy, capitalraisingparty.com.
Super simple. So, Taha, if you don't mind, just drop it so everybody
Yeah.
got it a click away. Tell us a little bit about the capital raising parties. Like, I know it's more of an open forum so everybody can join and learn and grow with one another. Could you give us a little bit of a deeper dive of, again, I'm a newbie, I'm trying to figure things out. What do I expect to gain from
Um, I'm sorry. I was trying to log into the
it?
chat. Ask your
Too many
question
things going
again.
on at once.
Yes.
Yeah. Tell me about a little bit about the format, and if I'm just checking in on the capital raising
The
party, what am I going to be
Gotcha. Yeah.
seeing? How
Yeah.
am I
Yeah.
going to
Yeah.
benefit?
Yeah, so it's a live show like this, right? It happens every Tuesday, and I interview, a top capital raiser in the country, or even a top, attorney. Because Nate, you've been on, as well, yes. And yeah, so I interview a top expert in the country, to learn about like their strategies, and so I, number one, as the host and the person who's interviewing, I get to learn from them, and then all of the people who are attending also get to learn from them, the whole community. And then we also have breakout sessions where you get to network in a more intimate setting with other attendees that are on. We do that on Zoom, and so we're able to do breakout sessions that we can't do here on this StreamYard platform that we have now. But yeah, so it's whether you're new or you're seasoned, the networking part of it The content has been really great. I mean, we have some of the best in the industry on. I enjoy it. But what I'm more proud of than the content is there has been tens of millions of dollars raised through the networking part of it. And that's just the ones that reported to me. Who knows how many more that didn't report to me? I'll give you an example. And he actually, joined my Capital Alliance Mastermind group 3 weeks ago. He was on the last three capital raising party. He has a deal, Roy Brown. He has a deal in Phoenix. He's doing a motel to multifamily conversion.
Mhm.
And and he joined the capital raising party the last three times. Since then, he had met with and talked with around 50 investors, and raised over $2 million from the party. So there's been so much money that's raised on that show. So yeah, if you're doing anything around capital raising, if you just want to be there to learn from the experts I'm interviewing, great, you'll learn that. If you have a deal you're actively raising money for, and you want to network with other potential LPs, co-GPs, fund of funds managers, that's a really great place to be as well.
And you brought up the hotels to apartment conversions. I just got to say, I love what's going on in that industry. You can get into hospitality and hotels at such a lower price point compared to what it costs to get into multifamily. I think we're going to see a huge wave of these hotels to apartment
Yeah.
conversions. And it's just barely starting now. So if you missed a lot of the last 10 years of multifamily, here's something for you to really pay attention to, learn more about, jump in. And it sounds like Tim here, he's got a show to teach you a little bit more about that area, in addition to how to actually benefit, grow, and raise capital to make more deals happen with it as well. So couldn't say enough about really, Tim, what you're doing, how you're helping the world grow. And it sounds like you're creating some mentors there as well, the guys that are able to create the synergy, help with the education, and create more opportunities across the board.
Yep. Yeah, for sure. I mean, it's a team sport, as you know, Nate. And yeah, I actually love this industry. Like in the single family home space, the deals are so small, you can just do it yourself. So you can be a one man, you know, like show, all day long in the single family home space. But in this multifamily commercial real estate space, the deals are a lot bigger. And so yeah, it's a team sport. And I just love that aspect of the business. I get to focus on what like I'm really great at and partner up with others for everything else. And yeah, so I as you know, I do a lot of fun. So coming into this industry, I decided to specialize on capital raising, and through a structure called fund of funds. And yeah, so my job every day is to source top proven operators that have a good track record, and then raise money for our funds and invest into their deals. And yeah, so it's I get to be a part of this industry without ever having to worry about managing deals, and I love that.
So if I'm trying to figure out what operators or what GPs that it makes sense to work with, is there like some criteria that you can share of what you see as being really important?
Yeah, so there's a number of things, and it depends on your buy box. I'll share with you my funds buy box specifically. So we look for operators that have at least $100 million asset under management. That tells us that they've done a number of deals. They manage quite a bit of units, and then they have gone full cycle. We look for ones that have gone full cycle on at least 5 deals typically. We do make exceptions sometimes, but uh, for like the upcoming superstars. But yeah, so we look for they've gone full cycle, so we know that they understand how to manage it. And chances are, if they gone over full cycle on over 5 deals, they they gone through even before the 2001, 2002, the peak of the market. They've been in business for typically at least 5 years. And then also too, we want to make sure they don't have any foreclosures, any like SEC violations, anything like that. So we do background checks
Important.
on them. And then I also ask around a lot. So whenever I have an operator that I'm considering, I would ask other people in the industry that I know to see if anybody invested with this operator. See if there's anything that's negative about them. I've seen some operators that looks like they're really solid, but when I ask around, they're like, "Oh no, I wouldn't invest with that person because of this and this reason." And sometimes the reason could just be because um the deal gone bad that they invested in, or it could be like the lack of communication from the operators. Surprisingly, lack of communication is the number one complaint I hear from other LPs about
Yeah.
other deal sponsors. It's insane, but so when you are an operator, make sure you communicate, over communicate if you have to. But that, yeah.
I'm a fan of the true transparency. Doesn't matter if things are going good or if it's going bad. Being transparent and constantly informing your investors, one of the most important things in the world. And when things do get a little tight and get a little tough, and on a long enough timeline, you come across those projects, investors don't get shocked. They have this level of fear if they don't know what's going on. So having that nonstop communication, I'd say, is one of the most important things. For your projects, you have kind of a best practice of when and what gets communicated on a regular basis.
Yeah. So w- w- at a minimum, we communicate on a monthly basis to our investors. Sometimes, even if it's not much, we just go out there, take some pictures, get like, it's like, hey, here's what here's what it looks like now that we put the some paint on. Or like, even if sometimes our updates are so minuscule, but still we update anyways, because we want them to hear from us at least once a month about the deals that they're investing in. With the deal volume that we have, we're constantly talking to them about other deals anyway. So it's good for us to be in communication more often, so that way, whenever we have a deal that's coming up, they're not shocked to hear from us. They kind of expect to hear from us. And so, yeah, so don't worry about don't worry about like updating them on small stuff. As an invest, and I'm an LP in quite a number of deals, and I can tell you this, like the 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 GP, the operators that communicate with me more often, I'm much more likely, especially more. Here's my preference: is at least once a month. Is my preference. I have some GPs that communicate with me once a quarter. I think it's way too long. Like, sometimes I wonder, it's like, wonder what's happening to that deal, and I haven't heard from that person in a while. And so, but the ones that communicate, at least monthly, they're much more likely to get money from me again.
When you bring up, I mean, you're an LP in a bunch of deals, you're looking at a project. What are you thinking about from the property aspect? And then I'll ask you about kind of your due diligence with the operators as well.
Yeah. So, for me personally, I especially like Texas because I live here in Houston. I like to be able to drive to the property, even though I'm not gonna do, excuse me, even though
Yes,
I,
don't
I,
choke out
yeah,
on the show, please.
yeah, even though even though I don't have any asset management or anything like that to do with the deal, but I like to drive my kids to the properties as well, just so that way they know, hey, dad invested in this deal, and get to check it and take pictures and stuff. And so Texas is my favorite, but I do invest in a number of other states as well, because once I find the operators that I like, and they're they meet all the criteria that I'm looking for, I'm willing to go where they're going, wherever they're finding deals. And so that's so like so it's more of a preference more so than like um, uh, a specific, a black and white thing. And then I like multifamily. I understand it well. I like self storage. I understand it well. I am looking for other assets types as well, but I just start with the ones that I can relate to the most. So my first LP investment was in multifamily. Um, and yeah, so and then I like class B because it seems like it has it's the middle of the ground. So if the class A needs to downsize, they can downsize to B. If class C's need to upgrade to B. And so like that middle ground, I feel very safe with that. So that's the other thing. Like you hear Warren Buffett talks about uh getting a return of your money is more important than getting a return on your money. So I look for safe assets. I don't go too crazy when it comes to my passive investments. Now my active stuff, as a business owner, I take lots of risk, so I do that on my active side. But my passive side, I want to make sure I can sleep well at night. And so that's one of the criteria I look for. So if I don't feel comfortable because of anything about that deal, I'd rather not invest in that deal and just,
Mhm.
look for the next one. Yeah.
Let me ask you this. What's more important when you're considering what to invest in? Is it the operator or is it the property itself? Like, what's the biggest driver for you when you think about becoming an LP?
Yeah, 100% the operator, right? So back to the concept of like getting a return of your money, that's 100% on the operator. The property might give you a return on your money, but because the property might look really good, but if you have a bad operator, they can make a good deal bad. And however, the property can be mediocre with a good operator, they can turn that into a good deal. And so yeah, operators 100% is always number one. And yeah, and I look for, like I said, I look for proven operators. The it's kind of sucky. One of my friends says, Tim, what about all the little guys? Like, if you don't invest with them, how are they gonna grow their business? Like, well, it's not my job for them to grow their business. Like, my job is to protect my money. And so I want proven operators. So the new guys, they can play with their own money. They can play with, their friends and family money to grow and build their proven track record. It's just that's not my buy box, right? That's not my investment box. My investment box is I specifically look for proven operators, that doesn't have any, foreclosures or anything bad like that. Yeah.
I would say, I mean, if anybody is just trying to get into the space and they're interested in being a GP, LP, just being involved, I think you're really nailing it with the operator is one of the most important components. But to kind of bring it all back to your capital raising shows and these events and the networking, that's really where it comes together. But also for those that are trying to get into it, how to find those, well, operators or mentors that
Mhm.
will help you learn and help you grow. Is that a part of an intentional purpose with your show and your groups, or just it naturally is happening anyways?
It started as a selfish reason more than anything else, really. Like I wanted to learn the business. I wanted to learn the business as fast as I can, and I figure, the best way for me to learn it quickly is to interview and learn from the best of the best. That was like, so I'm gonna seek out for the best of the best in the industry and interview them. I'll give them value by having a community that will listen to them and give them exposure to the community, and I get value by being able to ask any questions I want to ask them. And so yeah, so it started out just me wanting to learn, and obviously it's a win-win all the way around.
I love it. Well, let me just throw this out, especially if you are, have been, should be checking out Tim's groups and his shows. I want to throw out my own. If you want to just learn more and continue to get educational information and other information, go ahead and follow this QR code. It's to just get more education, as well as I put together a book of what I really coach and how I take people through a getting a deal done investment process. So check out this QR code, and we're just here to help. I mean, at the end of the day, I know that Tim, you and I are really, we're just trying to make good deals happen, bring together the communities, crowdfunding, and seeing more stuff happen.
Yeah,
So
definitely.
you've got like this next level, like you've got your weekly shows, and that's really for the masses, for the newbies, for the people that are just trying to get interested. But you're actually put on some more formalized events. And I know you've got one coming up called your Fund to Fund Summit. Can you tell us a little bit about your event that's coming up, when it is, and how we can all join?
Yeah, definitely. I love this topic, fun of funds. When I first started out, getting into deals, I used to do coach GP type deals, but the coach GP type deals require me to have an active role in the deals versus the fund model allows me to not have to have an active role in the deal. I still have an active role in my fund, and so I've been doing a lot of these fund to funds type of capital raising, and using SPV funds. We also have a traditional blind pool fund as well. And so I want to bring this topic of funds, fun of funds, to more people. I think it's a great business model, and so I think this is our industry's first ever Fun of Funds live event. I don't know of anyone else doing it, and so yeah. So if you want to learn more about funds, if you want to learn more about Fun of Funds, which is what you do with your funds once you get your fund started, yeah, you get So this event, we have speakers like Nate here and myself and other fund managers, experts in the industry that will be teaching and sharing with you. Plus, you're surrounded by a lot of other fund of funds managers, and so if you want to if you're a fund of funds manager yourself and you want to network with other fund of funds managers, great place to be. If you're an operator, you're looking to access the money from these fund managers, that's for them to invest into your deals, is also a great place to be for that. And yeah, it's happening in Dallas, Texas on May 3rd and 4th. We have a mastermind day on May 2nd as well before the event. Yeah, so if you want more info on that, go to funoffundslive.com. Funoffundslive, live.com. And for some reason I couldn't put the link in the comment here, but I'll try again.
Aha, give us
Yeah.
a hand. No, well, you bring up the funded funds. I know I brought up the summit. At just a very base level, what is a fund of funds?
Yeah. So, so you have, when you might be familiar with a fund, is when you pool money together, right? You raise money from several investors together and you would invest it into your project if you're doing, an acquisition or development project. So that's a normal fund. A fund of funds is, instead of investing that money into your own project, you invest it into someone else's project, whether it's another syndication or another fund. Um, and that's what a fund of funds is. So that's my business model. My team and I, we're not operators ourselves. We don't source our own deals. We only partner with other top operators and invest into their deals.
Okay. And so hey, I know where some investors are, kind of what does it look like when I'm like, okay, I'm going to put together this fund of funds and I want to participate? Like, walk me through the process of, if I was interested, I want to become involved. Like, what's my step by step to make it happen?
As a passive investor.
Now I'm active. I want to raise my
Okay.
own fund.
Oh, gotcha. Yeah. So it's super, especially if you never set up a fund before. The first type of fund to set up is the first easiest fund to set up would probably be an SPV fund, a special purpose vehicle fund. So let's say Nate has a deal. Actually, let's say I have a deal. Say I have a deal, and I'm doing a $10 million raise, and I come to you, and you want to be a part of my deal, and you're gonna raise $1 million. You go to Nate. Nate's gonna create the fund docs for you, the PPM, subscription agreement, all of that. In that specific structure, Nate will take a look at the deal level docs, right? Look at my PPM subscription agreement, and he'll use that to build the PPM for you for your SPV fund. And then from there, once the docs are ready and you have your bank account open, you can now take in investor money from your side. And then once you have the money on your side, you wire it over to my syndication, and now your fund comes into my deal as an LP. Let's say I pay a 70-30 split to my normal LPs. Let's using that as an example, okay? But because you coming in at $1 million, maybe I'll pay you an 80-20 split. So that margin, between the 70% that I pay to my LP and the 80% I pay to you, and let's say you paid 70-30 to your LP. So you have that 10% margin there. That becomes your profit. Plus, you might get a piece of the acquisition fee, or a piece of the whatever else, others that other profit centers that you can have as a fund manager. I hope that was
Yeah.
I don't know if I explained it too complicated, but yeah, I hope that was
Well,
clear.
let me just throw it out there for anybody that is interested in it. A couple of really important key parts. If you put together one of these SPVs, a special purpose, single purpose vehicles that's going into a single syndication, it really is disclosures at both levels, because you have the property, you have the syndication, you have the operators there, and then you have your own fund and what's going on in that entity as well. So it does get a little bit more complicated. Make sure you're working with an attorney that has experience and has gone through this a bunch. Of course, I'm singing the praises of Crowdfunding Lawyers, my firm. But at the end of the day, just make sure you're working with somebody that knows and understands the intricacies of these fund-to-fund models. And number two, one of the most important things for everybody to pay attention to and remember, and Tim, you're bringing this up as well, you're having these multiple levels of waterfalls, different split at the syndication level compared to at your fund of funds level. So it's really for the economics and the financial analysis. You have splits upon splits. So when you're figuring out what you're going to be telling your investors, you got to make sure that that is considered. That's part of the pro forma of your pitch deck, of the overall structure. So those are a few of the things that just going through this hundreds of times over the years, people tend to forget about it or ignore it. And it's some of the most important things ever to pay attention to. So something else that you had brought up is you're having a mastermind before this summit. We've talked about your show, understand that's open to everybody. The summit, hey, you want to get live and in person, but it's a larger event. You've also got a mastermind. Could you share a little bit about that?
Yeah. So our mastermind is called the Hero Capital Alliance, and it's a mastermind for fund of funds managers. When I started, raising money for deals, and I was bringing 250 or 500 or even $1 million to a deal, I realized that the economics that the syndicator or the other fund manager gives you, it's okay. It's nothing to to brag about. But if you were to bring 2 million, 3 million, 5 million, 10 million, now you have a whole lot more negotiating power. And so I started the Capital Alliance as a as a way to join forces with other fund of funds managers, so that way when we go in on a deal, we're able to we're able to raise a lot more money and get a much better economic. So even though individually we might still be bringing in the exact same $1 million, but instead of a 10% profit margin, we can negotiate for a 15, 20, sometimes even higher profit margin on these deals. And so so that's what the mastermind is for, is for people that wants to come in together and do a bigger raise, bring a bigger check to the table on these deals.
To put it a different way, and correct me if I'm wrong, I almost see it as like an investment club of syndicators. You're making a decision as a group, you're investing as a group, but you're investing as a group with your individualized funds of funds. We'll just call them fun funds. I'm trademarking that one. Don't steal it. But is that kind of the concept behind it, is the power of the individual syndicators coming together as a club to make bigger, better, and better negotiated deals happen?
Yep. Yeah, pretty much, because there's more than even just a deal. Like, because we're coming together, we have a much more like a much bigger knowledge base, right? So if any of the fund managers have had a bad experience with that operator, we know how to stay away from them. So we're able to share those things, and we also have multiple layers of underwriting and vetting. So it's not just one person that's vetting. And so so we're able to utilize our resources and leverage our collective wisdom and resource so much more than doing it on our own. That's the extra perks beyond getting a higher profit split or a higher profit margin.
And if I was interested in finding out more and joining the group, is there like a criteria or an application process?
Yeah.
Like, how do we join?
Yeah, definitely. Well, first thing first is just getting plugged into to my community with the capital raising party. From there, you can book a call with there's lots of opportunities there to book a call with me, and then we get on the phone, get to know each other, making sure that we're the right fit for you, you're the right fit for us, and and then we can have a conversation around that.
So it sounds like it's more of a one-on-one invite.
Correct.
Rather
Yes.
than something that is open to the masses. But if we do want to be involved, get involved with your community, your weekly show, and of course, check out the summits as well. Get that live time introduction and a little bit more mentorship and education.
Yep, for sure. Yeah, it's a history in the making event. So definitely be there. Nate's gonna be there to speak as well on, on fund of funds, on crowdfunding. Earlier, remember I mentioned to you guys about our Teen Millionaire Challenge. Well, Nate and his team is helping us create a regulation crowdfunding fund, and we're going to be so that fund, these teens that are in the program now get to be fund managers in that fund, and then the ones that are not part of the GP team gets to invest as a passive investor in that crowdfunding fund. So there, I'm super excited about that. But Nate's going to share with us at the event, not just how to raise money for for your Reg D, 506C, 506B type deals, but also for your Reg CF type deals as well. Yeah.
It's kind of fun, like just literally within the last 4 or 5 years, the ways to raise capital and the markets themselves has shifted so much. I mean, when I got started in kind of the capital industry, there was, now it's called the Reg D Rule 506B, but you weren't allowed to advertise. You weren't allowed to market. It was like one of these, side, hey, let me tell you about this deal to somebody that you actually knew. Then around 2012, this crowdfunding, the bigger reach out to everybody, kicked into high gear. But even more recently, and why a lot of people haven't heard about regulation crowdfunding, is now they've changed some of the regulations. They've expanded it where you can raise millions of dollars now, and the potential to still do the tens of millions of dollars, still raising capital from an unlimited number of non-accredited investors, which was unheard of in the past. So, yep, that's going to be the fun and excitement of just the various things that we'll talk about at that summit. And if anybody has any additional questions, we're going to hop into like looking into the future, but please post them in the comments. And we've got an amazing educator here. He's here to educate. But I do want to ask you, Tim, what do you see happening in the future? What does your crystal ball tell you?
Yeah, I mean, it's a bloody market coming up, no doubt. I'm sure you've heard that from a number of places, and we see it. We see operators in trouble. Even some big ones are getting, foreclosures now. However, as Warren Buffett said, basically, like, you want to take advantage of the market, right? When the market is down, right? When there's blood in the streets. And he also said, when, even if it's your own blood, and so, yeah, so, we're seeing deals that are, oh my gosh, at 20, 30, sometimes 40% discount than what it was a couple years ago. There's the deal that I'm raising for right now in Dallas. We're buying that one at $70,000 a door, like, super
Wow.
cheap. So lots of deals are happening. There was another deal, a friend of mine just got in the contract yesterday. The institutional player is a big deal, but the I forgot which fund it was that owned that deal, but they're discounting $60 million off of this deal just to get rid of them. And so that's happening. Blood is definitely in the street, but the good news is that for those of us who are willing to be bold and willing to take advantage of it, the opportunities is there for us.
So, and I want everybody to understand, like, what's happening in the market that's really creating these opportunities is, for the last decade-ish, there's been historically low interest rates. And all of these deals are happening. People are closing. People can pay more because those interest rates were so low. The carrying costs were low. And so it still made deals make sense. A lot of those loans are coming due this year. And anybody that's trading from a 3% to a 7% interest rate loan, the ongoing carrying costs go through the roof. The operating costs end up being sky high. So not only are they no longer profitable, they're looking at losses. But now they put the property on the market, and you know what? Nobody can pay that same price that they just did because those interest rates are so high. And so the prices have to come down to continue to make the real estate, the opportunities, the numbers work, because rents don't fluctuate like crazy. They've been going up quite a bit for the last few years, but they can't fluctuate as much as some of these, the cost of debt, the cost of insurance. So there's a reapportioning of kind of the entire capital stack that's really creating those opportunities today. So everything that Tim says is unbelievably true. I love what's happening in the market, except for those that get hurt along the way. But I was practicing real estate and syndications and investments back in Las Vegas in the 2008 to 2010 timeframe, when property values literally dropped 50% plus. And just one of the big things that I want to share with everybody that may be interested, may be scared, may not know what's going to happen. Well, when these property values drop, that's also when the millionaires are made. Right now, there's really high interest rates, but you know what? Those high interest rates are going to come down. They're still anticipating 2, 3 interest rate drops over this next, by the end of the year, is what the Feds have been indicating, what Wall Street's been indicating. And every time that interest rate goes down, the value of the properties go up. It's just the way that the math works. So right now it is, well, historically okay interest rates, but the reality is over the last decade and a half, they're unbelievably high. It is unlikely they're going to stay unbelievably high. So everything that Tim is sharing and teaching about, now is the time to get active and get involved. At least that's my thoughts on kind of where the opportunities are and how to make it happen. Oh, and Tim, I see you finally figured out chat. Congratulations. That's a. Didn't you say you were in tech? No, I love it. In terms of what you're looking at, it sounds like you've got quite a few deals on the table. Anything that you'd like to share that you're really excited about?
Yeah, if you, if you haven't been like in deals yet, gosh, this is an amazing opportunities. Whether you're an LP or you're coming in as a GP, you're operator doing deals. It might sound scary out there, and I'm pretty sure the news is gonna make it even more scary. But just know that this is the time that this is probably one of those rare times in our lifetime to be able to build an amazing amount of wealth and legacy for ourselves and our family. And so don't let the news scares you. Just go in there, get plugged into communities like what Nate have here, plug into my community with our capital raising party. You get inspired by what others are doing. You get to learn what's working for others. And so that's one of the reasons why I host all of these events and stuff, is so that way I get to learn along with others, and you get to come up. It's an opportunity for you to come along and learn as well. Yeah, and together we'll be a lot stronger, we'll be a lot smarter, and a lot wiser. That's for sure. And yeah, we'll help each other succeed.
The getting wiser, I think it is impossible to get wiser unless you're in that room full of experienced people that they've been there, they've done it, and they've tripped. They've had the problems, they've overcome those problems. That's exactly who you should be learning from if you're trying to get into real estate. If you've already been in real estate, just make sure that you're surrounded by those that know and have been there based on the experience. Whether it's good, whether it's bad, that's the way that you as an individual and as an investor grow.
Yep.
So with that, any final thoughts? Otherwise, we'll cut it and get on with our day.
Yeah, well, come join us in May 2nd to 4th in Dallas. You get to hang out with Nate and myself, and we'll have some fun. So yeah, go to our funoffundslive.com, and then definitely join our weekly capital raising party as well.
I love it.
Thank you.
Appreciate you. We do have one question, so I'm going to throw this out at you.
Okay.
Any news on tokenizing the shareholders' sides of funds? I've got some comments on that. I want to hear your thoughts.
a couple of people have approached me doing stuff like that. I mean, I'm not too deep into that. It's just, anything about tokenizing is just a more it's more challenging for a lot of passive investors to wrap their head around.
Yeah.
But I think it is the wave, the wave of the future for sure. Yeah.
And I will say just the KISS method of keep it simple, stupid is so unbelievably important. But if tokenization, it's a buzzword, but if you just think about it as it's just a ledger of who owns what, it's no different than keeping an Excel. So I hear a lot about tokenization and how all that works. And at the end of the day, especially with these smaller syndications, don't worry about that, because stick with what's tried, true, proven. And that's what we're here to educate, share, and provide to the masses. So thank you so much, Tim, for joining us today. Really appreciate you. Looking forward to joining you early May with the Fund to Fund Summit, and hopefully everybody else will join as well.
Awesome. Thank you so much for having me on, Nate. I enjoy it. Thanks everyone for tuning in.
Thank you.